Good afternoon and welcome to the FX Daily Wrap Up. And it's a relatively quiet session ahead of the ECB data here. And we'll move this out of the way. We'll go in and take a look at the data which really impacted the euro as we headed even lower, as we track lower. You can see here on the German PMIs, you can look here, came in at actually 43. The Reuters published a 45.2. It's a 7-year low. So, once again, Germany leading the pack for lower. And some of the PMIs in other countries in the Eurozone have not been bad at all. I mean, surprisingly, Italy has been okay. I remember last month, but German PMIs continue. It's really the auto industry that's one that's really taken the bigger hit here. And as we look into the in the Eurozone market flash PMI, still weaker nonetheless. Poll was supposed to be for 47. So once again, this is why we see the euro continue to push lower. One of the things that we've referenced, and it seems like every day there's a brand new high in the German Bunds. Obviously, inverse relationship, new low rates. Some think that the ECB will take action. I know I was looking at TD Securities out of London. They're looking for the ECB to keep rates as steady, but that to pave the way for a 10 basis point cut into the September meeting, lay the groundwork for further stimulus. But we shall see here with that. Obviously, the S&P is still hanging close to their highs, and gold just kind of languishing here. We'll go in and move in. We've certainly seen a big move, and you saw a very nice little shooting star here as crude moved up, and then we turn around. We've given up quite a bit of that back on this. But we're going to move into the main screen. For the most part, the market is quiet ahead of the ECB. One of the things that we reference here, and like I said on the ForexAnalytix, I already did the basic technical last evening during the ASIN session. And what we're looking at for was, this market potentially to get down to 1128. Well, what do you know, folks? It made it down to 1128. And really it's just a technical level because everything is just so weak here, and every day the euro continues to drive lower. We're coming off a little bit off of that 1128, but you can see how important that is. If we get beyond 1128, we're looking for 110, but there is a pit stop before there at 110, and you can see that comes in at 1079 here, right there for the euro on a potential move down here to 110. We shall see, but I mean, let's see what the ECB does tomorrow. I would think they just keep on loosening. They just keep doing that. Draghi has yet to, in his entire tenure, ever to raise rates, and they're looking at ways under the cover of having to, go for inflation for their 2% target. They're going to keep looking to go in and stimulate their own area. So we shall see what we get tomorrow, but certainly wouldn't be surprised. I mean, we have really come off. I mean, 1285, we've mentioned that before in the last couple of weeks. We thought that was just a minor move as the euro recovered off that, and we thought we could push higher. But once again, with the Bunds going to new lows as far as rates, that has really kept the pressure on the euro. And then in turn, we've seen continuing weak Eurozone data with Germany leading the way. So it certainly has kept that pressure up. And with that, we'll take a look with the cash dollar index here. And we have the big level, the 97.89. One of the things we're looking at, and we mentioned here, once again, the basic technical. Look, this is a very, very big key level here, 97.89. Goes way, way, way back. Not going to go on and bother with seeing that. But once again, that's why we have it on a little bit more solid blue line here, because it's a key area. Now, we've had moves above it, but each time they paired back. But we're, once again, you get to 97.89, we're just a stone's throw away from these highs up here at 98.37. So certainly we have the potential for the dollar index to continue to move higher, and we have 25 basis points already priced in. So depending on the Fed's outlook, and their own responses, we could maybe see this thing try and push higher. I mean, we'll see what happens with the ECB. Obviously, if they stand pat, that'll probably, in turn let some pressure off of the euro, which would in turn push the dollar a little bit lower. Certainly the dollar's moved higher on the thought that the whole debt deal, they've been able to get that resolved. But like I said, the pressure still remains for this year to go on a weekend. We're just coming off with a little bit of short covering off of that key 1128 level. The dollar CAD, which we were talking about, the 1162 area, was a short-term, not 1162, I don't know why I'm saying that, but I mean 3162. We did see the market pair back, and we said on any pullbacks, look for the bids to come in at the 3120 area. Well, yesterday the low was 3122. Today we've gone and tested just a little bit below that, and once again we found bids. This market looks like it wants to push higher when you think about the rally we saw on Friday, only to turn around and reverse that most of that move by 50 pips off the high, test the old 30.43, and then turn around and reverse that. So the market's really open to move higher. We've just run into a little bit of resistance at the 23% area here, and 31.62 offered a good area for some longs to take a little bit off the table and restock. And restock is the area was going to be 31.20, and we're just kind of holding our own at this point. The peso has run into some trouble here at the 19.20. When we come back to the peso, we know, and we've been saying this for over a month and a half, the key level, and nothing has changed, has been the 19.23.6. Even when we had all the talk about, when the finance minister resigned on Twitter, we saw this big old run up. We danced around for a couple of days. It still wasn't, once again, even then, we couldn't even close above 19.23.6. So we've come back up here. We had our bias chart resistance yesterday at 19.15. The market got to that and paired back a little bit and then reasserted itself, but we're not able to get above this 19.20 for now. But the real proving ground will be 19.23.6. If we get a daily close above that, the market will be looking at chops, looking for a quick 20-pip run here to 19.43. For right now, we have our bias chart support today at 1908, and we had, once again, we come up with those levels during the European crossover webinar, which is at 4 a.m. Eastern time, and it's recorded. As I mentioned before, Stelios does put the recording about an hour and a half before the New York Open, so you have an opportunity to go in and not only catch the analysis, but also be able to go in and get these intraday levels that we're looking at, which, once again, they're short-term levels, so some people may be scalp levels, but a lot of the guys or gals kind of incorporate that in their own work if they're looking to, let's say, they've been shorting the euro, maybe looking for an area that maybe to cover a little bit of it. We had this 11.28. We had this 11.28, actually, that level with our basic technical analysis that was posted in the Asian session last evening. So once again, you may want to consider a subscription with ForexAnalytix for 10 days for only $1. Gives you the opportunity to not only check out all the disciplines, whether it be macro, technical, harmonics, but like I said, once again, you have a chance to go and look at this, and of course, Elliott Wave. But also get the opportunity to be in the chat room, which is very supportive. Like I said, a lot of great ideas shared by everyone in the chat room. But look at it, like I said, the market's going to be relatively quiet ahead of this ECB. Dollar yen is just kind of ticking its own. We had our bias chart resistance remain at the 833 area here, and we've just, after kind of dithering here and making a move up here, it's kind of eased back, but the resistance for right now is going to be, which isn't that far away at the time, but would be this 850 area here. And the dollar yen has actually been divergent. If you think from where the dollar strength is, it's almost seemed as if it's the canary in the coal mine. We've hit some levels before. We have our bias chart support today at 778, but once again, we still have this door open potentially, if we do slide, to come all the way down to 630, and we'll take a look at that. So if we get that move, we can still make a run down here to the 630, the 78% here of this entire move. We shall see. It certainly acts like it's just marking its time until the next successive move lower. One could maybe almost look at here and make this like a bear flag almost. But we shall go on and see. Let's go on and move into the cross rates. Well, certainly with the weakness in Australian dollar, we've seen the euro, probably the only currency that can get some muster against, which has been the euro odd, which has come off of these lows and pushed higher. We're just above our bias chart resistance, and you can see here with the sterling versus the Australia. We mentioned this since yesterday. We got a buy signal here, and certainly the market has been able to go on and push further. Someone was asking about it. One of the guys in the chat room was asking about the potential for shorting opportunities. Well, right now, like I said, we have that short-term buy signal, but if you were trying to step in and short this, right coming here is a good little daily level right there, 79.53. That would also confluence here with the slower exponential moving average that we have here. And probably an area where some long would going to lay a little bit off, kind of like the way we saw with the dollar CAD, at the 31.62. So you can see this area right here coming across these touches, closes, coming across high, close, open, close, close. So some good resistance there at the 79.53 if you're looking to step in. Once again, the market has been there very oversold, so you don't want to rush in it, but we know the sterling continues to remain weak. We're seeing a little bit of strength in the sterling now that Boris Johnson's taken office. Not that that's necessarily a positive in the market's eyes. It's just that the market, we pretty much got, milked it for what it's worth for right now, so a little bit of a short covering there. Australian Aussie yen continues to stay weak. Still pushing lower. We'll take a look at it on the daily. And we've discussed this on the European crossover. You can see here these two gravestone dojis. And then as we dip lower, we just kind of held our own and opened the door for us to move lower. Certainly, like I said, if you're looking to sell into that, these two gravestone dojis offered a good opportunity, with the thought that the market's probably going to have to ease back as we've had this run up here. So certainly we have done that, and support, you'd be looking around there, that 75.31 area here on the Aussie yen. As mentioned, the euro odd has moved higher with the weakening of the Australian dollar. Last night, one of the things that helped kick the Australian dollar is in the Asian session. I think it's Governor Zhang of PBOC stated that if the Fed does move with its interest rate cut, they're not looking to move. They said they're comfortable with where they're at. So that certainly weakened the Aussie, not a whole lot, but it certainly put it under some pressure, and we're seeing that pressure continue to be sustained here. Gold kind of easing its own here. One of the guys was mentioning about the weakness and potentially that we could work a little bit lower. I see that too, but I'll put a caveat with that, and we'll go to that screen. You can see here on the 2-hour chart, looks like the market's a little bit tired, but can we dip? Yeah, but can we start to accelerate? That's the only question. Can we dip? Because once again, with the ECB expected to come out with a dovish policy tomorrow or lay the groundwork for a potential cut, I wouldn't necessarily expect it to just come apart. Slide a little bit, yeah, maybe slide a little bit into the ECB, but maybe about $2, maybe $3. The way we're looking at it from a technical standpoint, but to come apart, not really, not ahead of the ECB. Is going to be in less than 24 hours and expect it to either be dovish, very dovish, or lay the groundwork for further stimulus. So that's all that we have now here. Like I said, we'll be ready for tomorrow's ECB. Thanks for joining us here on the European Crossover webinar.